Oh my god, oh my god, oh my god, oh my god. Hey guys, Stephen Alford from Alford Fortune, creating fortunes for the future. Today's date is the 14th of February 2024. Time is really flying. Anyway, hope all is well with you. Today we're going to identify some aspect or somehow to identify which is the best stock you can purchase on the Australian stock market, ASX, that pays you dividend. Basically, it's pretty simple. Okay, firstly, all you have to do is Google up, or you can follow this concept, so the processes I'm going to show you right now. Follow through. Let me bring this up a little bit. Go into what is called market index, and you type in highest dividend yield on the ASX. Okay, and it will bring you up a list of all the highest dividend paid stocks. And these are the Australian ones, of course. And to date, this is what they produce. This is what they're showing. So you can pick from a list. And basically, what I'm looking for is any stock that pays dividend above 10%. Now, cross earning is on this column, of course. As you can see, it's relatively high. Now, on the left here, where it says yield, that's the yielding process, but how much they actually pay out is looking across. So without confusing yourself, just look at the cross. That's the best one that I use, the cross earnings. Now, to correspond that sort of results, I used this other website also, Google Finance, just to double check. And here's a stock here that I have relatively been investing in, only because, here we go, the dividend yield is 28.57%. Now that is pretty good. And you're looking for something that is going to be consistent. And of course, I have done a little bit more research with this particular stock, Base Resources, and they have been paying consistent dividend since the time they started paying dividend. That's about 4 or 5 years ago. So the record history is pretty good, and they're pretty consistent with how much they pay out also. Now, that's just a hint for you. You don't have to, but I'm just giving you a tip there. Now, if you have a look here, that's one of the most important factor when you're looking at purchasing a stock, the price. Not every high price stocks is going to perform as good as some of the, say, penny stocks. Penny stocks is the low priced stocks. And in this case, 15 cents, and they're paying 15 cents a share. Of course, if you have to buy the shares of the stock. Sorry, first before you can earn a dividend from it. Anyway, before we go any further, there should be a link below this. Subscribe to my YouTube video, and you will get a lot of these insights into investing in the near future. Every time I make a new video, you're going to get a ping on your site to say, Stephen's make another YouTube video. Would you like to have a look at it? Now, that's what subscription does. It just helps you locate me if you want to have a look more at my videos. Now, go back to what we were talking about. Locating a high dividend paid stocks. Okay, let's look at YAL, Yan Coal Australia Limited. They're paying 27.10%. That's relatively pretty good at $5.64 a share. You can go through the list and take your pick. But prior to buying the stocks first, you must do what it's called research. You've got to research the stock. Okay, just say, let's look at YAL. And if you're using Google Finance, make sure you put down this first. ASX ... Before you put down the company code, it will bring it up. Then you click on it. And you do a little bit of research of it. Research means you're just looking at a little bit of history, how the company has been performing to help you make your decision. Okay, this is maximum, and it shows this particular stock has come up to its peak, means where it's reached before. As you can see, it's starting to reach that point before it comes back down again. It's not a perfect guideline, but it's something that you can utilize if you want to say, take your profits out if you have bought it down in these dips or level. Maybe it's time to say, okay, it's come up to that level now, considering to sell all your stocks. This is totally different to what I'm talking about dividend. This is just giving you some extra tips, how to manage, how to look at the charts before you purchase the stock. So at this point of time, I'm doing a little research and I look at it and say, oh, okay, it's nearly to its top. I'm a bit cautious. because it might just drop again as soon as I buy. So those are the sort of things that I tend to look at. And of course, I'm not really interested because of this little downturn here. If that downturn, if I purchase today, that downturn might continue to go down to this level down the bottom here. And I would not like to buy it, not at this stage. Now, I'm going to explain why. Say you purchase some shares of the stocks, YAL, at $5.62. Now, your purchase price will show up at that price, $5.62, regardless how many shares you buy. Now, if the price drops from that $5.62, you're losing a little bit of value of your investment. You don't lose money. Remember that, just the value. And if it recovers in the near future, yes, the value will continue to come back until it passes $5.63, where your capital gain of the stock will continue to grow and will show it in green, not in red. That's the extra information I'm sharing with you, how to buy a stock. It's a simple process. Now, I'm looking at it to buy because of the high dividend, as we can see here. The dividend here, 18.99% of this particular stock. Again, I'm emphasizing you're trying to locate a high-paying dividend stock because the dividend only gets paid out once a year. Some company pays out twice a year and some company pays out 4 times a year. It just depends on each company. Each company have their own structures. So it is important to do your own researches first before you purchase the stock. Now, in essence, if you don't know anything about the stock market, firstly, if you're in New Zealand or Australia, go to your bank, ask the bank to set up what it's called a stock market trading account with your bank. The bank then will set this account up strictly for you to buy stocks on the stock market using that bank account. That's all that bank account does. Helps you access the Australian, the New Zealand stock market, and all the other markets around the world you can access from that bank account. So if you want to join how the elite or how some people make a lot of money from investment, try the stock market. And that's the process. Go see your bank, set up what it's called stock market trading account. If you are with ASB in New Zealand, go see them and ask them to set up what it's called a ASB security trading account. That account allows you to access the stock market to buy, sell, and manage your own portfolio, investment portfolio in the stock market with that bank account. If you're in Australia and you're with Commonwealth Bank, go and see them and ask them to set up what is called a ComSec account. And that also allows you to set up that account to access the stock market and manage, buy, sell your investment portfolio within that bank account. So you're doing all your investment in one bank, for example. So you have your investment account with your bank, and you have your savings account with your bank, and whatever account that you also have with the bank. So it's sort of a one-stop shop. The banks will also charge you for a transaction fee and also for selling fee. In New Zealand, it's a little bit more expensive to purchase stocks and to sell stocks. Say, for example, you're spending $1,000 to purchase a stock in New Zealand, the bank will charge you $15 to buy and $15, I think, to sell. So basically, those are some of the principles and the basics. But back to what we were talking about, locating a good stock to purchase that's going to pay you dividend. Okay, so all you need to do at this point in time is to calculate. Say, for example, you purchase a stock, okay, depending on the stocks. Let me get my calculator up here. You purchase a stock for, say, $1,000 worth of YAL. You punch in $1,000 and you calculate that into $5.64. And that should give you about 177 shares. Basically, now, 177 shares times 27.10 times 27.10% will give you about $48 a dividend a year. Or basically, you can purchase a stock, say for example, Base Resources at 15 cents a share. If you bought $1,000 worth of it, you just time it with 28.5%. It should give you around about $285 of dividend. That's a simple calculations, of course, and you can see the difference. It doesn't necessarily mean the higher the price of a stock that's going to give you the best returns of investments. I mean, it's not always the case, but there's one example for you. But that's found by research. Do your research first to find the best possible stocks to purchase so you can captivate on the bonus. Bonus is, of course, dividends. So those are some of the basics. Don't quote me on that, but that's basically how the principle works. You can easily utilize that process to give you some sort of, it just gives you a calculation. That's all. It's not perfect, but at least you can have a fair idea what sort of income you're going to be generating. I know it's minimal, but if you pull that, say, $1,000 to say $10,000, that can be quite substantial. But anyway, we'll continue. And basically, that's how you try and look for dividend-paying stocks. Do some analytical sort of process to analyze the stock, just using the charts. You can read up stories of it too. Do a little bit more researches or in-depth researches, and it will help you in accordance. But anyway, I hope I'm giving you a little bit of insights into the process. Firstly, as I said, subscribe to my YouTube video. Go see your bank, set up a stock market trading account. Check for relative stocks that pays pretty good dividend. Even if the price is low, don't worry too much about it, because basically the stock chart will give you that sort of point of view. When, where, what's the best time to purchase the stock. I mean, the chart's not going to be perfect, but it gives you some sort of reference instead of working in the dark. So the reference point when you buy in helps also to maximize your profit. So for example, we're going to purchase YAL. Okay, I wouldn't buy at this point in time. I'll wait a little while just in case it drops down to this level again. To these pitches, the low pitches. If it comes down, then I'll probably consider purchasing YAL. So if you have the cash and you don't, and YAL is not available, it doesn't stop you having another, research another company. For example, let's check up NHC. I'm just giving you some idea how to do researches. Very simple researches. NHC. Okay. It's called research. You're just using historical data to give you a bit of reference. So I'm studying New Hope Corporation. Okay, at this point of time, I say no. Why? Because it's pretty high, and if I purchase it now, it might continue to drop. So I'll give that a miss, and I'll go for another one. Hold on. Remember that stock we had up here earlier on? Oh, at the same time also, you can use these processes just to track, like a dummy round or practice round called Market Watch or Stock Watch. Hold on, wait till we go through here. Okay, this particular stock, BSE, I am willing to buy as many shares as I can out of this stock only because it's showing a relative low pitch. I don't know if it's going to continue to grow, but that's the gamble we take. See, it's dropped, very similar here. Very similar here and very similar here before it recovers. Whether it will continue to recover, that's the gamble we take. But at least I'll be purchasing it at a relatively low price. I could wait a little bit longer if I wish, or I missed out on the point where it was only 12 cents a piece. But now it's up to 15 cents. And if it continues now to grow, then I'll be substantially making pretty good capital gain. On top of that, I'll be gaining also a high dividend yield or payout when they're ready to pay out, which is around about September, I think, or April. Hold on, don't get me wrong. I think it's March and April in this particular company. Each company have their own structure, so don't base one company to another. Every company or every stock has their own, because it is a simple process. So what you're doing is you're purchasing a stock, gain its capital gain when it grows from 15 cents up to, say, 31 cents. That doubles your actual investment, and at the same time you get some bonus. These are the bonus called dividend that the company pays out because the company is sort of making money according to the chart. But anyway, don't forget to subscribe to my YouTube video. Go out there and begin building your investment portfolio, because the sooner you start, the sooner you're going to be able to learn some of these principles or website or where you look for. Because if you don't start, you'll never know anything. So if you do start, and if you have any questions, you only got to come back and look for me. You can probably find me on Facebook or Telegram. Just look up Stephen R. Ford and you'll find me. But anyway, this is Stephen R. Ford from Marford Fortune, creating fortune for the future. We love you, God loves you, and we'll see you on my next video. Bye for now.